Hi there, it's Mark Sebastian, founder of Option Pit, and this is the Stock Market and Option Volatility Report reminder. This is for education purpose only. Shouldn't be considered investment advice. Options have risk. Consult a financial professional if you have questions. Happy New Year. Happy day. We're all happy. Go us. Well, it's been a great new year. Hey, I'm going to be speaking at the SIBO on Thursday the 10th. For our rescheduled event. If you're in Chicago or going to be in the area, make sure you come and check out things at CBOE when I'm going to be doing a discussion on finding edge. Speaking of finding edge, how about this market, huh? Well, let's start out with China. The idea that China is going to grow at 6% is about as believable as Bitcoin being worth $25,000. I just don't see either of them happening. And I think that things are a lot worse in China than people realize. And, if the point of affecting a quote unquote trade war on China was to push them to the table and affect their economy enough that they don't have a choice, then, I think we're seeing some of those effects. China had some other own problems anyway, but I think the growth out of there is abysmal. And that's probably a decent sign for trade negotiations. Believe it or not, the worse China gets, the better trade negotiations get. Xi can only really hold his power while that economic growth engine is working properly. And it appears to not be working properly right now. Everything's dismal there. But you can see there's some things are kind of soft across the board. Caterpillar's soft, Amazon, Costco, Apple, everything is pretty much soft. Sans, a few bright spots here and there and payments look a little up. The vol space is up a little bit, but across the board, there's really not a lot happening. Nothing really looks that great. I guess Facebook's up if you're looking for something positive, but in GE. But other than that, there's really not a lot going on from a individual stock perspective. We were down 40 on the open. We're now down 20. They've cut it in half. I would be less than shocked if we got to green. I think China's economy and the U.S. economy have kind of bifurcated at this point. They've partially separated themselves. And that, what's happening is maybe more related to the Fed, but I think a lot more related to just kind of, I think we'd had a really nice run. Jitters at the end of the year were a little high, and I think that we saw a really rough quarter. I like stocks in the first couple of weeks this year. I think they could be extremely bullish, 2,700 by January expiration. That's how bullish. Now, that doesn't mean we're not going to give some of it back. I think things are choppy. There's no more free money from the internet for the Fed. That's going to create more volatility. So I think it's going to be harder for VIX to get to 10. And you're also going to have a harder time. Vol's not going to collapse the same way with XIV gone. That's another thing people need to get used to. So looking at the individual sectors, as you can see, everything is down with utilities being maybe in the worst shape and biotech and industrials. Just real briefly looking at that VIX complex, I really want to point out VVIX is 87. There is no expectation, no demand for upside in VIX options. And they do not appear, VIX options are pricing themselves like there is nothing left to this. Like the panic might be over. At least that's the way things are pricing. All right, folks. There you have it. I think on the day we could go green. I think there's a decent odds of the VIX going back into a contango of some type this weekend, or at least getting flat. And that could happen if we go green, maybe not by Friday, but that's the way things set up, is things extremely flattening this week. And there you have it. Hope everybody has a great morning, a great day, and I'll talk to you soon. Happy New Year.